Are you ready to discover the top 5 aerospace and defense stocks to buy now in this turbulent time? Stick around to the end and find out which of these stocks is our favorite and why you should add it to your portfolio without delay. But before starting, subscribe to the channel and activate the bell to always be notified of new videos. We are immersed in a world where global tensions ignite like unstoppable flames. Currently, there are 32 major conflicts and an uncountable number of armed clashes shaking the global scene. This scenario pushes investors to seek safe havens for their financial resources. 2022 saw global military spending reach record figures, reaching $224 trillion, marking the 8th consecutive year of unstoppable growth. And that's not all. The United States alone has allocated over $886 billion to its military spending. In this climate of uncertainty, investors are looking for sectors that can offer refuge and an alternative way to protect their portfolios. And it's no surprise that defensive stocks took off in October. Historically, during times of global conflict, defense stocks have proven to be a bastion of financial stability and security. However, paradoxically, many of the largest companies in the defense sector, such as Boeing, RTX, Lockheed, and Northrop, already appear overvalued compared to their reference sector. Here are the top 5 aerospace and defense stocks to buy now in this period of international crisis. Number 1. BAE Systems plc BAE. BAE Systems is a UK-based company offering defense, aerospace, and security solutions. It offers electronic warfare systems, cyber intelligence, surveillance, and many other solutions. Given rising geopolitical tensions, BAE Systems' order backlog increased by more than $84 billion, with 44% of its revenue coming from the United States, 20% from the United Kingdom, 17% from the Middle East, and 13% from the rest of Europe. This year, BAE Systems is delivering strong financial performance and has secured a large number of defense contracts to support growth and strong profitability. The latest 2023 half-year results show strong operational performance, with revenue growth, margin expansion, and a focus on capital allocation resulting in operating cash flow of $4.86 billion. Not only is BAE Systems winning million-dollar contracts with the U.S. Army, but the stock is still down as investors ponder whether wars abroad will expand. Additionally, the stock is still trading at a discount to the industry. Winning a $4.8 billion contract for a nuclear submarine from the UK's largest defense firm this month, growth prospects for the company are strong. BAE today trades at a price of $54.35 with an increase of 12.55% in the last month. Its potential target price is set above $65. Number 2. Royce Holdings plc, Royce. Headquartered in the United Kingdom, Royce Holdings is a versatile and innovative operator of industrial technology. The parent company of luxury car maker Rolls-Royce later established itself as an aircraft engine manufacturing company. Operating in 4 segments: civil aerospace, defense, power systems, and new markets, this company offers industrial solutions for safety-critical applications on land, sea, and air. Founded in 1884, Royce Holdings has a strong foundation and offers a legacy of extraordinary products and services. The defense sector is its second largest segment and is generally stable, with steady revenue coming from government and defense contracts. In reporting its first half results on 3rd of August 2023, Rolls-Royce highlighted improved operational metrics across its segments, with increased orders, margin improvements led by civil and defense, and strong financial results. Its defense division grew 87% in the first half of the year. By targeting cost savings, including job reduction plans, the company wants to improve profit and efficiency. Rolls-Royce today trades at a price of $2.68 with an increase of almost 7% in the last month. Its potential target price is $4.4. Number 3. Cagre Holdings Inc., CDRA. Cagre, based in Jacksonville, Florida, is a company that provides safety and survival equipment and protection for users in dangerous or life-threatening situations around the world. It is a trusted global supplier of innovative products to first responders, federal agencies, and organizations. Cagre has consistently beaten earnings estimates and expects to announce results for the third quarter ended September 30th, 2023. With a focus on strategic acquisitions to drive growth and diversify the business portfolio, Cagre has continued to grow while maintaining strong distribution and manufacturing capabilities, generating cash flow and a solid backlog. Cagre's success is reflected in its modest quarterly dividend of $0.08 share. Up 41% year-to-date with strong growth and profitability ratings, Cagre has room for further gains despite its current price. Investors seeking defense in a stock that delivers safety and survivability need look no further than Cagre. The company today trades at a price of $28.60 with an increase of almost 6% in the last month. Its potential target price is above $35. Before continuing, we are interested in your opinion. In these turbulent weeks, which stocks do you think could represent an excellent investment and why? Let us know your opinion. It is very important to us. Number 4. TransDigm Group Inc., TG. TransDigm designs, manufactures, and supplies aircraft components globally. With more than 60 manufacturing locations across the United States and nearly 7,000 employees, TransDigm's goal is to provide its shareholders with the highest possible returns while remaining focused on the details and creating value. TDG offers highly engineered and proprietary airport components, giving it significant pricing power while operating with leverage. The exclusive assignment protects TDG products, of which they own approximately 90%. This is an advantage because, as competitors try to enter the industry, they must be licensed by the Federal Aviation Administration, FAA, giving TDG enormous pricing power. Since its IPO in 2006, TDG's private equity-like strategy has been to target companies and improve their operations. In the third quarter, the company generated more than $400 million in operating cash flow, finishing with $3.1 billion. Revenue of $1.74 billion beat estimates by nearly 25% year over year. The remarkable growth and results have led 16 Wall Street analysts to revise estimates upwards over the past 90 days without any downward revisions. The company today trades at a price of $882.08 with an increase of almost 8% in the last month. Its potential target price is above $11.70. This is one of the top 5 aerospace and defense stocks to buy, now that in our opinion has a lot of growth potential and a very low risk of a drop in value despite this turbulent period to say the least. But before moving on to title number 5, if you liked the video, please subscribe to the channel. Put a like and activate the bell so as to always stay updated on new videos. Thank you for your support. Number 5. AAR Corp. AAR is an independent provider of aviation products and services and operates through 2 segments, aviation services and shipping services. The aviation services division rents and sells new, overhauled and repaired engines, parts, components, and more, while also providing fleet management and operations for the U.S. Department of State and other government agency services. Expeditionary Services designs, produces, and repairs military and humanitarian instruments and systems. AAR has benefited from exclusive foreign military agreements and multi-year agreements, contributing to its quarterly price performance and extraordinary growth. AAR Corp has demonstrated solid revenue over the previous 4 quarters, which has led to 2 upward analyst revisions for fiscal 2024 in the past 90 days. Revenue of $549.70 million exceeded year-over-year estimates by more than 23%, benefiting from a 34% increase in sales to commercial customers and a 3% increase in government customers. Repair and engineering sales increased 8%, and integrated solutions sales increased 22% compared to the previous quarter. Adjusted operating margins increased to 7.3% from 6.9% in the same quarter last year, and most operating margins expanded for its divisions. The company today trades at a price of $62.95 with an increase of almost 7% in the last month. Its potential target price is above $73. Amid market and economic uncertainty, stocks in the healthcare, consumer goods, and aerospace and defense sectors can protect portfolios from inflation and volatility due to geopolitical factors. These are the top 5 aerospace and defense stocks to buy now that offer growth characteristics, elements of sustainable profitability, solid valuation foundations, and returns in a rising interest rate environment. Each stock is a top performer in its sector, with bullish momentum beating the S&P 500's year-to-date returns. Each stock is discounted and benefits from rising prices. Consider these choices to diversify your portfolio and as a hedge against increasingly hostile geopolitical events. We want to remind you that we are not financial advisors and that these are not invitations to buy, but are our personal market analyses based on our experience in the U.S. stock market. We invite you to do further analysis and evaluation in order to make an informed choice on how to invest your money wisely.
See you, investor!